Stop hiring sales producers. It's only killing your business and it only benefits the carrier that you're working for. Instead, hire referral partners and start producing revenue instantly. Hi there, my name's Brian Hedger and I've been an insurance agent for the last 18 years. And today, I want to talk to you about one of the biggest mistakes most agencies make when creating more business for their agency. And they do so because they are put pressure on by their carriers to create more agents for the carrier and to use your agency as a training ground. From the beginning, I was told that if I wanted to grow my business, I needed to staff up. I needed to hire producers that would create new leads and new marketing activities for me to quote. Offering a compensation package of base salary and commission split would incentivize them to produce more policies for my agency. I was also told that the new producers would break even within the first year and the residuals from their production that would follow would be pure profit. And that simply wasn't the case. In reality, there's only two types of licensed agent. There's the service agent and there's the sales agent. The service agent is one that just adds cost to your business. It's great with dealing with your existing customer base, but they are less prone and less proactive in creating new lead generation and spotting cross-sell opportunities. The second is perhaps the one that you're looking for, the sales agent, the one that's going to increase revenue and have revenue increase quicker than the cost of having them in your agency. You're going to develop their skills and help them with their network and have them create their own lead generation, which therein lies part of the problem, which I'll come to later. So let's have a look at that recruitment timeline, and we'll forgo all of the time and effort that you have to put in for interviewing and scheduling times to put people through credit and background checks. And let's just say that you have a viable candidate in month one in your office. Those first 3 months that they are getting to grips with new terminology, new systems, and underwriting guidelines, their production is going to be somewhat low, if any. And you're going to have to pay that base pay of about $2,500 per month for the first 3 months. So that's a total of about $7,500 as an investment that you have. For between months 3 and 6, you're going to see some production, but that's probably going to be from the marketing that you're providing. And it's going to be little to no networking because they simply don't have the vocabulary or the professionalism to be able to referral partner network. After the 6 months, you're out of pocket by about $15,000. And at that point, you're probably going to assess whether this is a viable candidate to pursue or you're going to cut them loose. But let's just say that you continue on and it is a viable candidate. Between months of 6 to 18, you're going to hope that they have better production. And they have started to do some networking now where they're bringing in their own lead generation. And hopefully, the best case scenario is that they're breaking even within your agency. After 18 months though, between 18 and 24 months, there's a high probability that that sales producer starts looking to open up their own agency. If they can do this and generate more revenue than cost, and can work independently of your office, why wouldn't they start their own agency? So let's have a look at that traditional ROI again. Now we know from the industry retention rate that the sales producers' retention within an industry is less than 12%, meaning you have an 88% chance of repeating this recruitment process every year. And that means that the revenue that you're bringing in is about $15,000. And that's really 6 months worth of production at $25,000 gross written premium per month at a 10% commission rate. That's cost you $30,000 in the base pay. And really that is a negative income of $15,000. With the policies written in that first year, and assuming that you have a retention rate of at least 70%, it's going to take 3 years before you get a break-even number on those sales. Now that we've exposed the myth created by our carriers on how to increase business, let's have a look at some of the solutions that I've found out in the last 18 years of doing business. If you're looking to join our referral network program, you can expect to have exclusive referrals from loan officers that require insurance for their clients to qualify for their mortgage or refi. Even a service producer can enjoy a quote to bind conversion rate of 70+%. Also, these referrals are on a scalable amount, so you can have 10 or 1,000 per month. The only limitation are the number of work hours in the day that you have within your office. And you can forget about monoline policies. These clients are high product count per households. They are highly motivated to bundle their insurance products, and you can typically find at least 2 autos, a home, and an umbrella policy within these accounts. Industry research tells us that 3 or 4 product households remain within an insurance agency for between 8 to 9 years. And including a life insurance policy will increase that to 18 to 20 years, which is just tremendous. So let's have a look at that digital referral program. You'll be paired with 5 loan officers, each producing 3 to 5 loans per month. That means that you'll receive 15 to 25 household referrals every month requesting insurance so that they can qualify for their loan. Each of these households comes with at least a 3 product density average, which means that you're probably likely to sell the 2 autos, a home, and at least an umbrella. That means a possible 30 to 40 additional policies every month. So let's have a look at the digital referral ROI. You can expect to see a return on your investment within the first month of activity. There's no need to wait 3 years to see a return on your investment. And the typical first year return is 2 to 1 or 3 to 1 on your investment. And that's a great return by any stretch. You'll have exclusive access to referral partners that are waiting for your call. And what's great about this is it's an automated, repeatable pipeline for your service agents to close these referrals. Also, and perhaps more importantly, these referral partners remain exclusively tied to your agency and will not disappear when your sales producer opens up their own agency. So if you've made it this far, I know that you're interested, but you may be skeptical and you certainly have questions. I want to let you know that this is a program for agents with experience, looking to grow their agency. It's not for newbies. So if you're looking for a modern approach to a traditional problem with a proven track record and accountability, let's chat. Simply click the link below and schedule an appointment for me to walk through this process in more detail. This really is just a short video for me to outline the process so we can have something to talk about when we meet. Until then, I wish you all the best in your endeavors, and I look forward to speaking with you soon. Bye for now. And today, I want to talk to you about one of the biggest mistakes most agencies make, and they make it because they get pressure from the carrier to produce more agents for them. It's got nothing to do with you making more money within your own agency, and it's all about the carrier. The reality of agents is somewhat different. All licensed agents will fall either into service or sales producers. Service agents are the majority. They add cost to your business with little to no revenue. They're not particularly good at spotting new opportunities or new cross-sells, or even lead generation activities. Then you have the sales agent. These are typically the ones that you're wanting to recruit. They have a higher revenue than cost ratio, and you can train them to develop their skills and their network to create their own lead generation. But therein lies the problem, and I'll come to that later. Let's have a look at that recruitment timeline again. Let's forego the fact that you have to schedule interviews and appointments to find out suitable candidates and run them through credit and background checks. In the months 1 to 3, they're really just getting an understanding about the industry, learning the new terminology and dealing with the underwriting, understanding how to quote systems and input them into the CRM tools that you have. All in all, you're not going to get much production out of them. And really, for the first 3 months, you're going to have to outlay that base pay. So let's call it $2,500 a month. Over 3 months, you're already out of pocket by $7,500. Months 3 to 6, you're going to see some more production, but little to no networking or marketing. They simply don't have the vocabulary or the professionalism to be able to recruit referral partners. So you're still going to have to pay that base pay, and maybe some commissions will come through. But all in all, within the first 6 months, you're already out of pocket by $15,000. And it's probably at that point you're going to decide whether you're going to continue with this candidate or you're going to cut them loose. If you do continue with that candidate, that is between months of 6 to 18, you're going to see some better production and you're going to see some networking. And the best case scenario is that you're going to break even. Then, after somewhere between 18 months and 24 months, there's a high probability that that sales producer starts looking to leave your agency and start their own and take those referral partners that they've created in your agency with them. And that's where it benefits the carrier, not you.